The next financial crisis is coming for sure. When it comes, nobody know, and who claims no, definitely don't listen to this guy. However, a lot of experts are debating where and what will cause the financial crisis. So we have governmental debt, we have corporate debt, we have student debt that is sky high at the moment, but we are having a new expert on the block. He was already right for the last financial crisis with the subprime loan market and also with the housing crisis, and he shorted it and made millions and millions of dollars, and he is saying that the next financial crisis is in the index fund. So all about that now in this vlog. So if you're new to this channel, make sure to subscribe, guys, and I am happy to have you here back on the vlog because we are talking about daily, every single day, about finances, stocks, stock market, breaking news, all the things that make you a better investor. You made the right choice to come here, so you are just one click away. Actually you are 3 clicks away from your financial freedom. This is 1, the subscription button, B, the ring notification button, and third thing that you have to do before we start is to thumb up this video for the algorithm to promote this channel, to make the videos better more often, and so on and so forth. So today we are talking about the next financial crisis, and we know already where it's coming from. It's coming from the index funds. Why we are rolling now. So if you have seen, and most probably you have seen the movie The Big Short, if you haven't seen it, it's one of the most important piece of motion pictures that you can throw your eyeballs on beside the Wolf of Dubai channel. So make sure to check out the movie, and the guy we are just talking about now was played by Christian Bale, one of my favorite movie actors, and he played Michael Burry, which is like a very big specialist into stocks, and he discovered the housing crisis before anybody else. He went to big banks, he made short contracts, they laughed about him, and then after, when the financial crisis was rolling, he was the happy one. He made over 700 million US dollars in the financial crisis just for his investors, for his investment fund, and make sure to see this clip.
95, it's 30 days late, it's 60 days late. They paid on time. These FICO scores. Late. Well, they caught up on their payments. Another 30 days late. LTV 95, LTV 90. They caught up on their
60
payments.
days late. Jesus, when is LTV 110? I've never heard of that.
30 days late rated adjustments. 7 rate adjusts. LTV 90, 95, 90. Jeez. He hasn't moved all day. He does this every few days. He hasn't spoken to me since he hired me. Maybe LTV of high risk interest only.
Heard of that mortgage. He's heard of that LTV.
Ow.
Michael, how are you, guy?
Lawrence, I found something really interesting.
Great, Michael. Whenever you find something interesting,
We all tend to make money. What stock are you valuing?
No stocks. I want to short the housing market.
So according to New York Times, he did for himself over 100 million US dollars, which he reinvested, of course, and still reinvested in the market. Right now he's holding a couple of stocks, which is also, you know, if you're interested in my colleague Cooper Academy, he just made a video about that. Make sure to check this out. However, you are sure to know all about it here, and make sure to subscribe to this channel and thumb up because we are talking now what is the next reason for a financial crisis. And you know, he's not like nobody. He created over 500% profit for his investment fund when he was running it after the financial crisis. He was closing it with a big pile of cash for his investors. You know, he managed over $1 billion in his hedge fund, and so he's not nobody. So I'm trying to tell this in a very simple and but most detailed way. He believes that there's a lot of money and funds that are going into index funds, you know, like ETFs or S&P 500, Russell 2000, you know, indexes, or you know, a government of stocks where you put, you know, money into it and you covering a lot of different stocks. So he believes that there's a very similar problem that was also done with the CDOs, which was actually, you know, gathering together of different loans and package them as one, and then you purchase as investor this loan package, and you know, there was some bad loans inside it, and you know, once, you know, it exploded everything, and he thinks that something similar can happen to the index funds as well. Why? Because if you're investing into this index funds, the discovery of single stocks is, you know, not that much of a focus then. Because if you're doing that, you're investing in the index funds and you think the market goes up. So the reaction that can actually happen here is that, you know, if the market pulls out a lot of money out of the index funds, then, you know, lots and hundreds of stocks getting traded at the same time. Now, there's also smaller stocks inside these funds. So, you know, they're having a trading volume of just $5 million US, and if billions of dollars of retirement money and big investors, you know, big money leaves the index funds, then this stock's getting traded and maybe crashed totally. Now, speaking about the timing, nobody in the world can tell you when the next financial crisis will happen. Will it happen now during the next recession that is coming? Or will the recession be just a couple of years, then it goes back up? What we know is that we had the crazy bull run the couple of years after the financial crisis. You know, there was huge gains that you could get on the stock market, which was great for all the stock investors, and you know, a lot of the investor was lucky. Even when they didn't know a lot about stock investing, they just picked some stocks and they went through the roof, like the whole index funds as well. You know, we had all-time highs for S&P, Dow Jones, Russell 2000, and so on and so forth. So everywhere in the world, the ECB, the Fed, all pumping cheap money into the market, and the investor just pumping it to properties, pumping it to stocks, pumping it to index funds. And this is where the danger is coming up, because, you know, as Michael Burry say, he thinks when this happen, it can get very bad. Now, about the timing, we don't know when this can happen, but we know that when it's happened, and as longer it take, as more the bubble and the danger, even when it's not a bubble per se, the danger will grow every single day. And when it's burst, when the, you know, wave will come, it will really be ugly. And this is what Michael Burry is afraid from. If you look into his portfolio, he seems to be still good invested, you know, according to the latest statements that he has to make publicly. He's still investing into stocks, so, you know, it seems that he's not scared and pull out the money out of the market. He was very right in 2007, 2008, 2009, when the crisis really hit the housing market. He saw it, you know, that, you know, everybody wanted to have and buy houses, and it seems now a lot of institutional and funds searching for these index funds, and these index funds get just blown up. Stocks that are crazy overvalued inside these index funds, just because, you know, index funds are, historically speaking, the most successful investment ever. You know, never ever was someone beating the index funds. So, you know, that's why, you know, when you have a lot of money, what you do, if you're putting it in index funds, then, you know, it's a big chance, and historically speaking, you never lost. So you know, it's very interesting. You know, if you want to know more about this kind of things, make sure to subscribe and sum up this video to support this channel. I am vlogging every day about the stock market, about stocks, about how-tos, stock analysis, also finances in general. So I make you the better investor, and you make me the better YouTuber. Thank you so much for watching. Make sure to see you tomorrow, and don't forget, the grass is greener on the other side.